You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldandoilguy.com. Welcome to the show, Chris.
Hey, thanks for having me, Jim. Pleasure to be here.
Crude oil has not been the most pleasant ride for the last year and a half now. Any hope that it's going to go up soon?
Yeah, you know, it's going to be a real rough ride, and we've talked about this before, that even when oil bottoms, I think it's going to be a real struggle for it to really put in a basing pattern and actually start to move back up. I think there's some bigger powers at play that are probably going to hold the price down of crude oil. And, you know, we've seen a massive drop in January of crude oil, and it came right down to a Fibonacci extension level, which is just a technical level that if it was touched, then we'll probably see a strong bounce. And we did. I had a target on 26.50 for the continuous contract of crude oil, and price came right down there a couple of weeks ago, touched it, pierced it with a couple cents, and then we saw a 32% rally in crude oil back up to almost a $35 per barrel area. And that is the sign when you do a technical measured move like that and price hits it and you get a huge reaction and reversal off it, that goes to show that the market is still in a full-fledged bear market. It's very technical, meaning traders are actively trading. They're going to buy the oversold parts. You're going to get these sharp rallies like we just saw. And then when it gets to a resistance zone, they're going to step back on it and start selling the heck out of it. And that's what we've seen. 32% bounce in oil off this technical level. And now we've seen, I think we're down 12 or 13% already in the last 3 trading sessions. It's going right back into a nosedive, heavy volume selling. So I think we're going to see the oil market be very choppy in a huge percentage range here, and I think it could drag out months. So it's I don't think we're anywhere near bottom yet. I think we're still a couple months away of that potentially even forming.
Imperial Oil reporting its profits for the fourth quarter were down 85%. That's not going to encourage people to buy their stocks right now, is it?
Well, you know, it's really funny. It's a lot of my neighbors and friends and family, out of the blue, I'm getting texts and phone calls and emails saying, I'm interested in buying oil stocks. Like, what do you think about buying oil stocks? It seems like everybody is on this oil. They want to buy energy stocks. And, of course, oil's been in the headline because it's been in a bear market and selling off in a huge way. And I think the general public kind of have it right. I think crude oil, most of the downside here is done. I don't think we're going to go a whole lot lower than 26.50. I think we might poke down a little lower, maybe even 25, 24. But in the grand scheme of things, oil is pretty much down near the lows. It's not going to go a whole lot lower. So they've got that timing more or less right, but they all want to get into energy stocks. And here's the problem with that. If the general public wants to get into energy stocks, then it's probably not the bottom. They're probably going to be left holding the bag, and the prices are going to continue to fall. And the reason being is if oil trades sideways here, say between 26.50 and 35 in this range it's ping-ponging around in, if it trades down there for, say, 3 months or, say, 2 months, then the first quarter earnings come out for all these oil companies. Their earnings are going to be terrible. And, of course, if oil stays down here even longer, they're going to have the earnings are going to continue to erode. Eventually it's going to, you know, the share prices are going to get sold off because it's just terrible numbers. Dividends will start to get cut, or rumors of dividends starting to get cut. These energy companies, I think, are on the verge of something way bigger than anybody's expecting. And who knows how long oil will stay down here. We've seen commodities flatline for years at prices that just aren't even sustainable. It doesn't, you know, it's all emotion driven, and there's obviously some manipulation probably in there, but there's no reason oil has to knee-jerk reaction and rocket back up to $70, $80 a barrel. So if it stays down here, we're going to see companies closing their doors, share prices getting back to rock bottom prices we saw in 2008, 2009, and there'll be a great opportunity. But I think jumping right now is a terrible time. The U.S. stock market, the large caps, are a month away probably from starting a bear market. And then we're going to see stocks under pressure for months, if not a year or two. So why would you want to jump into stocks and that to me are still way overpriced? Even the energy stocks are way overpriced. So to me, it is a really dangerous play to get it long energy stocks right now.
Well, don't forget, people had 6 years of constant growth stimulated, of course, with all the artificial impetus from governments and central banks. So perhaps for some investors, they have no idea that things can go down at the rate they are.
Well, that's it exactly, right? The general mass, they don't really realize how much damage can be done. And we've seen a pretty sharp correction, no doubt about it, in the equities market in general. And energy stocks are down huge. But if you were to zoom out and go way back in time, I think we could still, they're still overpriced. I think we could still see much lower prices. And even if this is the low in energy stocks, it's going to be fighting a bear market, which means there's going to be constant downward pressure. So best case scenario, you see what we happened in late 2008 and early 2009. Energy stocks, the energy sector stocks, chattered around in this massive, 30% range for almost a year, for 8 or 9 months. Didn't go anywhere. All it gave you were nothing but heart attacks. You think you need to get out, then it's just really noisy price action. And that to me is probably the best case scenario, is it just chatters sideways here, but for months and months and months. And you've got to ride that emotional roller coaster. You're going to have your money tied up in energy stocks that are doing absolutely nothing really. And until the bull market starts, I think it'd be way better to buy an inverse ETF and profit from the falling stock market. And when the time comes, get into energy. I don't think there's any rush to get into energy stocks.
CBC had a program on the weekend where 10 Canadians were selected to talk directly to the Prime Minister. One of those Canadians happens to be a nephew of mine who was employed in the oil patch. Right now he's down to 3 or 4 days work a month. And the Prime Minister's advice was hang in there. Is that enough to keep your family alive?
Yeah, not so much. It's scary. If things continue to get bad, if the Fed starts to unwind their rates, I think we're coming into a really soft market, and people can't just hang in there. You can only hang in there for so long. Most Canadians are living paycheck to paycheck. So you can only hang in there for a couple weeks, a couple months, run up your credit cards, and then you got to pull the plug because you're having serious financial issues. So people can't hang in there. I think the economy's been pretty weak for a while, and people have been hanging in there for the last year. And people are at wit's ends. People are searching for jobs. Jobs aren't really paying all that well, and things are, the whole oil sector, it's really hurting jobs in Canada. And I've got a couple friends who work in the oil lines, work in the oil rigs, and it's terrible. Everyone's getting laid off around them. They're lucky that they're self-employed, have their own business, and are kind of a key part for several companies, so they get to keep going back in there. But man, it's just, there's no jobs. Everybody's getting laid off. Houses are selling a dime a dozen, over in Calgary, Edmonton. Like, it's very, very soft. And I think it'd be a great opportunity down the road for potentially even real estate. But I think we're still looking probably 18 months out before the financials catch up, real estate market fully, kind of pulls back and corrects, and the oil market starts to firm up, and businesses in the energy sector start to build employees back up. I think it's going to be a long process to retool, regroup from this.
What about the Montreal area mayors coming out against a pipeline from Alberta to the eastern coast to the refineries there? It seems to me they had no problem accepting all the equalization payments from Alberta when oil was high, but they don't want to help out now that oil's low.
Yeah, you know what? I didn't really follow any of that, but yeah, people usually don't want to help out. They'll take free money or easy money, but when the times change, they don't reciprocate.
Well, also, if we had a pipeline east, Canada could change the policy of selling oil in American dollars, and Canadians in the east could buy oil with Canadian dollars.
Yeah.
You could always make that as a condition of running the pipeline, and perhaps low gasoline prices could convince them that perhaps it's a good policy. There's also the thing in British Columbia where people, of course, realize, it's a unique environment here, the biggest temperate rainforest in the world to protect, and a great coastline. They don't want sludgy oil. Alberta has suggested, the government there is promising they'll give you $500 million if you build a petrochemical refining facility, which isn't a bad deal, perhaps. Would people be more accepting of, say, a refined product being shipped to the coast rather than sludge?
Right, yeah. Yeah, it makes, it'd probably be good.
And again, in the East, they have refineries that are empty. They're not getting enough oil to process right now. Why not convince them? And again, the old "I've got mine" attitude seems to affect people a lot more in tough times.
Yeah. The whole shipping of oil and the pipelines and stuff. One of my good friends works on them, and another guy I know has a company where they fly and they can look down with their software from their helicopter and see where there's underground leaks and stuff. It is unbelievable how bad all those pipelines and the leaks are, and how big some of these leaks are underground of oil and fields. It's sickening. It really is. I just don't understand why Canada can't have a refinery, and we do our own stuff here and save a lot of that. And it's just terrible when you look at the environmental side of things, what we're doing to feed the U.S. oil and let them make all the money on it, and we get charged an arm and a leg for our gas for something that we could produce a lot cheaper, I think, is pretty crazy.
And plus, modern pipeline technology has got to be a lot better than the technology they used to make our current pipelines that are 50 or 60 years old.
Yeah, exactly. That should really be the part that's replaced, because it would be more efficient. They can pump more faster. They've got the systems in place now are much more streamlined for flow, and obviously they would probably not leak nearly as much as these old decaying pipes that are leaking and bursting in places. So,
and again, too, Kinder Morgan could not come up with a proof or a plan that they could deal with spills, and the BC government says, we're not going to let you build more pipelines to the coast until you can promise you have the technology and the equipment to deal with spills. Their silence has been deafening in response to what the government wants.
Right, yeah.
And also, the pipeline companies have to do a better job of proving, we have the new technology, we have new monitoring. And right now, the fact that the response here is a ship the size of a tugboat for spills, but if it's a super tanker, don't you need a ship that's really big to scoop up that oil and do an effective job? A tugboat's not going to do it.
No, yeah.
And
sure.
And then, of course, you have the Burnaby Fire Department saying, Kinder Morgan, if you want to put, double or triple the size of the number of oil tanks you have here, what's your fire response plan? Because we don't have enough fire trucks in Burnaby to deal with a major blaze there. Do you have automated equipment or robots or shielded vehicles like they have at the airport to deal with airplane fires? Do you have things like that on hand? Again, silence.
Yeah.
So they're not doing a very good job of convincing us that that's what we want. And believe me, I'm an Albertan and I'm a free enterpriser. But on the other hand, I love the coast here in BC and the environment. Can you folks not find some way to protect it and have business go on as usual as well?
Yeah. I'm sure it's hard for these new companies to prove all this stuff, because a lot of the new systems aren't in place. They say they've got the technology and the pipeline systems they can put in, but a lot of the stuff has never really been done and used. So they don't have cold hard proof. And I think the government wants all that stuff. They want to see real numbers, and this whole pipeline stuff is kind of really just, I think, starting to take off. Eventually there will be some big pipelines done, but I think it's a real struggle because the software or the monitoring and the systems haven't been proven enough to make it worthwhile for the billions and billions of dollars that's going to have to go into replacing these pipelines. It's huge.
Again, government said, they want to spend a lot of money on infrastructure. Is it just going to be bridges and roads, or perhaps pitch in with a pipeline idea and get that energy flowing? Because we know eventually oil prices are going to go up. There will be a higher demand for it. The population keeps growing. The demand for oil keeps growing, even in a slow economy, just simply because of population growth. Moving on to something maybe that might be brighter. What's going on with gold?
Gold and silver have been holding up really well the last little while, the last couple months here. But in the grand scheme of things, if you were to zoom out on the weekly or the daily chart, gold, and go way back a couple of years, it's really all it is. All we're seeing here is a reaction high. We're trading up at a resistance zone. We've been flirting with it for the last week or so, and we haven't seen really any big money moving into gold or silver. We've seen some big days of buying in silver, some big volume days, but they get stepped on with big sell-offs again, and the gold and silver mining stocks have been underperforming. And I think there's some divergence there that's starting to say I think we're pretty much at the bottom for gold miners. I think they might see a little more pressure still. But I think everything is going to be very much timed with the equities market. As the equities market breaks down, starts a bear market, then I think we're going to see gold really firm up and start a bull market. I think the gold miners in general, like you look at the GDX or the GDXJ or the SIL, the silver miners ETF, I think they're going to struggle a bit still simply because there's a ton of junior mining companies and gold and silver companies that are going out of business. There's a lot of them just folding up and pulling those indexes down. Meanwhile, there's a whole bunch of great gold stocks that have actually surged 30, 40, 50%, sometimes in only a week. So we're starting to see life. We're starting to see companies kind of get picked up. They're at valuations where they're worth almost nothing. So we're going to start to see companies get swooped up by bigger companies, and that'll be the early sign that I think we're getting to this point that we're going to see precious metals put in a bottom, but we're really not there yet. And I'm not looking to pick the dead bottom in gold. We need a lot of upside movement before we see a real breakout in any real strength. I want to see gold above $1,200 an ounce. I want to see it hold up there, not just jump up and sell right back down. And silver's got to do the same thing. We've got to see a nice pop in silver, and we need to see the miners firm up. So there's a lot of work that needs to be done. I think it could take a month or two. We're getting there. I think we're going to see February, March, April, somewhere in this window, we're going to see the markets really change. Stocks are going to start to correct in a big way, and we're going to see precious metals and bonds really pick up speed. And, bonds have been a great play recently. We've seen bonds and the equities market moving up together on some of these days. And that's a sign that smart money is really moving out of equities, and there aren't a lot of other good spots to go. It's not really even piling into gold so much. It's really a big surge into bonds. So I think going forward, we're going to see bonds and gold itself probably hold up the best. But again, precious metals just aren't in a bull market yet. They have a lot of work to do.
Natural gas, what's happening there? Natural
gas has been a real yo-yo. It came down to an oversold level in December. We had a huge reaction back to the upside, and now it looks as though we're forming an inverse head and shoulder pattern, and that's somewhat of a bullish pattern. And in the month of January, and as of today, we've seen a bearish pattern form. And as of today, it pretty much came down and it's almost tagged a measured move, and it's actually put in a pretty strong bounce this afternoon already. It looks as though it's setting up for a sideways pattern, a basing pattern here, and then I think we're going to see natural gas have a strong move to the upside. I think we could see $3 on that. Right now it's trading at $2.02. So we're talking a 50% potential rally here in natural gas in maybe the next couple months. So it's starting to set up for a really nice buy. I think if we can get one more down day, somewhere down to the $1.80 level, I think it'll be a great spot to jump in for a short-term bounce that could end up being the start of a multi-week or multi-month rally back up to the $3 mark. So I'm starting to really like the way natural gas is performing.
BC's government has put a lot into the future of LNG. What is the future of LNG right now?
I don't follow the individual LNG itself.
But what about the actual industrialization of it and shipping it to Asia from Canada? Is that going to be a reality, do you think?
Yeah, it definitely could be. I remember there was big talks about it a long time ago, big tankers being made to bring it over in liquid form, and because we get it for almost free. So many companies are just burning it off. It's so cheap, it's not even worth using. If they can just get rid of it, they don't even want it. So it makes sense if we could package it up and send it over. That'd be incredible not to waste that energy. And it could be definitely a big viable system. It's just a matter of these super tankers that can liquefy it. Extremely expensive to build. And, in Europe, I don't know what they're paying right now, but man, I remember they were paying ridiculous rates for natural gas. So, I think it is something that's definitely viable. It's so affordable for us to get it out of the ground. Why not ship it and make a premium on it?
Well, why not build that pipeline east? Maybe not even ship oil, ship natural gas and get it to Europe. Plus, Europe gets most of their natural gas from Russia, which isn't the most reliable of suppliers. 2 or 3 times now, they've cut Ukraine off from their natural gas. So, they can always hold that threat over the rest of Europe as well. I don't think Canada would cut off the gas.
No, I don't think so. We're lovers, not haters.
Exactly. Unless you're playing hockey against us.
Yeah.
Chris, thanks a lot for chatting with us.
Hey, pleasure to be here, Jim. Thank you.
My guest has been Chris Vermeulen. His website is thegoldenoilguy.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. Comments or questions for the show can be emailed to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.